Markets remain on a fairly good sell signal. Now we're moving through that sell signal. This is the good news. This correction, we're moving through that sell signal, so we're starting to work off some of that excess. Here's what you need to know before the bell this morning. Markets came down on Friday and tested the 50-day moving average. Now remember, stepping back here a couple of weeks ago now, we were talking about, hey, the market was very overbought, needed a correction. If we took out the 20-day moving average, the 50-day moving average was the most likely test. That was on Friday. Markets came down, tested the 50-day moving average on Friday, bounced off of it. That's kind of the good news. So that first kind of initial test was positive in terms of the fact that we didn't close at or below that 50-day moving average, actually moved up a little bit off that low. But again, markets remain on a fairly good sell signal. Now we're moving through that sell signal. This is the good news, is that this correction, we're moving through that sell signal, so we're starting to work off some of that excess. Have a little bit more to go. Now, futures this morning pointing a little bit higher. So again, we're going to try to open up coming out of the gate. Whether or not we can hold on to those gains will be the question. Markets are oversold here on a short-term basis, but not dramatically so. So again, seeing a little bit of a rally today, not surprising. But again, the question will now be between, can the market hold this 50-day moving average, rally back to the 20-day, and then get above that? That would signal the end of this correctional process. That's a little bit early to kind of hope for that. The real question is do we rally to the 20, fail, and then retest the 50, or potentially go lower on that? So do we get further correction here? Now, as we move into really September, kind of this finish up August, September, October, these tend to be kind of a flat period for the market. So historically, what we've seen after the market has been up for 5 months in a row, which is what we just went through, and we were up more than 10% in the first half of the year, August, September, October tend to be fairly flat historically. So again, we kind of see market chop here for the next 2 months, 2.5 months, before we move into that November, December kind of performance chase. Now again, a lot of portfolio managers kind of behind the curve this year. Need to catch up on performance, so they'll be kind of loading up their ammo, so to speak, over the next month or so during this kind of pause in the markets that historically tends to happen on average. That doesn't mean it has to happen. Just historically looking back, after you've had a 10% gain in the first half of the year, you typically kind of get this flat to sideways market for a couple of months. Market kind of takes a pause. Then you get this performance chase in November, December to wrap up the year as all the portfolio managers are trying to play catch up with their allocations. But again, look for a bit of a rally here over the next couple of days. Markets, again, oversold enough here. What you were really looking for, of course, is for this moving average sell signal to turn back into a buy signal. That would tell us that this correctional process is over. I don't expect that to happen right now. Again, seeing a bit of a rally here, another retest of the 50-day moving average, a bit more kind of consolidation and chop here over the next couple of weeks. That would be the best setup here for kind of an end of the year kind of advance. But again, we still have that risk. If the market does take out this 50-day moving average, we still have that risk down to the 100-day moving average, right around 4250-ish. On the S&P. So again, there is some downside risk here. So again, continue to kind of maintain your risk controls in your portfolio. Don't be super aggressive here. We'll get a better feel for when to start kind of more aggressively adding exposure to portfolios, but that's not right now. So again, be a little bit cautious. That's what you need to know before the bell.